So on Thursday, March 12, I bought a dividend stock that pays me 24% yield per year. This one here, DFN.to, about 180 shares at $5. So why did I buy it at $5? Honestly, I don't know what the lowest point is, but I do know that $5 is very low compared to its previous trading prices. As you can see, it was trading at 8.7 before in 2019, 2020. In 2017, it was trading at 11. 2014 also at around 11 and 12. I don't think it's ever going to go back to 11 and 12. But what matters to me most is what happens in a crash. So in a crash in 2008, 2009, its lowest point was 5.3, 4.95. And on Thursday, actually, it reached 4.5. So the same day I bought it at $5, it actually went even lower to 4.5. It dropped 10% that same day. But I decided to buy some. I didn't buy a lot. I bought 180 shares. It's not even $1,000. And honestly, I don't have that much capital available. I only had a bit of capital in my RSP. But what I need to look at really is the drop. So between the highest of 2007 to the lowest of 2009, it was trading at $19, $20 and went all the way down to $5 or $6. So that's almost a 70% drop from the high when the market crashed. So that's what you have to look at is when it's trading at its highest here at 9 or 10, it has potential to drop 75% from its highs. So $5 is not the lowest. That's if we consider that it would drop the same way. Maybe it won't drop the same way. Who knows? I do know that $5 might not be the lowest point. It might go back up. But I felt comfortable buying a little bit at $5 because of the yield that it's generating. At 10 cents a share, that's 24% per year. So even if it continues to drop, if I get 24% a year, that's going to make up for a lot of capital appreciation. My intention is to never sell the stock and keep it until they cancel it themselves, until it doesn't exist anymore. I'm going to be getting 24% every year on this stock. 24% a year will fix a lot of issues. And who knows, maybe the crash is over and we're going to start going up again. So this is a mutual fund that comes from GearBest. They've got a lot of products that pay dividends, but the reason I went with DFN.to, which is this one here, Dividend 15 Split Corp, is because they've never missed a dividend distribution. They've always paid out a dividend every month. They pay 10 cents a share every month. They even paid it during the 2008-2009 crash. So that's very comforting to know that even during a crash, they're able to pay their 10 cents a share. So the stock dropped 75%. So the mutual fund dropped 75%, yet they were still able to pay their dividend. So you'd still be getting that income. So people who bought it here at $19, of course, they lost a lot of capital appreciation, but they've been getting 10 cents a share for a very long time. Probably enough to make up for that loss. So for me, buying it at $5 is pretty attractive, especially that it's generating a 24% dividend yield per year. So they've got other products here like Financial 15 Split Corp. Ticker symbol on that one is FTN.to, and this one also took a big drop on Thursday. It closed on Friday at 4.76. See, it moved 19% just on Friday. So if you had bought it on Thursday, you could have made a 19% return on Friday. But the dividend yield on this one is even crazier. This one pays 12.5 cents per month, and on Thursday you could see the lowest point was about $4. So if you had bought this stock at $4 and you're getting 12.5 cents per share, that's 3% per month. That's 37% dividend yield per year. Now the two reasons I didn't buy this one and I bought DFN.to instead. So this one has not been consistent in paying out dividends. So if you look back, you see that it's missed a few months. And if you go on their website and look at dividend distributions, which is over here, distributions, you could see that here, month of August, they didn't pay it. August 2019, they didn't pay it. December 2018, they didn't pay it. And obviously during the crash, they didn't pay it. See all this period over here. So 2012, they didn't pay it either. 2011, they didn't pay it. So obviously most of the time they paid, probably 90% of the time they pay. So even if you get 90% of a 36% dividend yield, it's still pretty good. But I wanted something that's safer, more consistent, something that doesn't fluctuate as much. I mean, this stock made 19% gain in one day. But also another reason is I like to look at the margin requirement of the stock. So margin, if you have a margin account with your broker, you could buy stocks by borrowing money. And the margin requirement tells you how much you can borrow against that stock. So for example, this FTN.to here has a 50% margin requirement. So that means that if you want to borrow money against this stock, you have to put up 50% of your own money, and then you can borrow the remaining 50%. DFN.to though has a 30% margin requirement. So you only need to put up 30% of your own money, and you can borrow the remaining 70%. So that means that this broker considers this stock safer than the other one. For example, if you look at Facebook, it's got a 30% margin requirement as well. So DFN is considered as safe in the eyes of the broker in terms of borrowing power. So that's one of the reasons I went with DFN.to instead of FTN, even though FTN has a much crazier yield right now. But I don't want to buy a stock and then it doesn't pay me the dividend that I want. DFN right now is at a 24%, and you can't complain. Over 20%, you cannot complain. I don't plan on selling this. I plan on keeping it forever. Just collect that 10 cents per share. Even if the stock goes to $8, I don't plan on selling it. It'll be hard though. If it goes to $8 in like 3 months, it's going to be hard to ignore an 80% gain. But I think 20% per year or 24% per year guaranteed without doing anything is worth it. They also have another product here, Dividend 15 Split Corp 2. Now the ticker symbol for that one is DF.to. That one of course also took a hard drop. So DF.to, but as you can see, it's not as consistent in the dividend payment. So it's missed a lot of dividend distributions, but the yield on it of course is going to be ridiculous. It pays 10 cents a share, and right now it's trading at $3, and on Thursday it was trading even lower. So right now it pays a yield of 40%, but that's if it pays the dividend. And since it doesn't pay it all the time, then for me it's not interesting. And how do you know if it pays a dividend? Basically, net asset value of the mutual fund has to be above $15. So right now the net asset value is 14.43, and for sure with the market dropping, it's going to be lower next month, because this is as of February 28th. So the one for March is most likely going to be lower. So they're not going to be paying a dividend, but when they do pay a dividend, you'll be getting a crazy yield. But I'd rather go with the safest one, which is, out of all their products here, their safest one is Dividend 15 Split Corp, which is DFN.to, and you can see that their net asset value is 17.07 as of February 28th. So most likely in March it's going to drop a little bit, but hopefully not below 15. And really what comforts me is that even in the 2008-2009 crash, they were still able to pay their dividend. And also the other thing is, this mutual fund has a termination date. So this one ends December 1st, 2024, but they just keep renewing it every 5 years, as they've been doing since inception. Let's say they do decide to terminate it. What happens is, as a Class A shareholder, what I get is the difference between the net asset value minus $10. So preferred shareholders get $10. If QuadraVest terminates the mutual fund, preferred shareholders get $10, and Class A shareholders get the difference between the net asset value and $10. As we speak right now, if net asset value is 17, and if they cancel this mutual fund, I'd be getting more than what I paid, because I paid $5. Net asset value 17 minus 10 is $7. But obviously net asset value currently is not exactly 17. This is as of February 28th, but March should be probably around 16 or 16 and a half. So how is this mutual fund able to pay these distributions? Well, as you can see, they invest in quality stocks, and they've been doing it for a very long time. So they get the dividends that these stocks pay, but they also sell covered calls on these positions to help boost the dividends. So that's really how they're able to pay these crazy monthly distributions. Now, if you want to go even safer and buy the preferred shares, you could, but you're only getting 5% yield. This one here is the preferred shares. It's actually trading at 9.5. Might be a good idea to buy it at 9.5, because your worst case scenario, you're going to get $10. So you're never going to lose on capital if you're able to buy it at 9.5. But as you can see, the yield is 5.92. So you'd be getting 0.0458 divided by 9.5 times 12. You'd be getting 5.8. So if you're happy with 5.8 for the rest of your life, and worst case scenario, you get your money back at $10, you could buy the preferred shares at 9.5. But if you look at the chart, it doesn't really move, because it's usually around $10. So you can see it's pretty flat. It's always around $10, but I guess during the crash it drops a little bit, even though it's preferred shares. So the worst it got in 2008 was 7.5. So definitely, if you're able to get in at 7.5, that's amazing, because you're going to get a guaranteed $2.5 if they terminate this mutual fund. Plus you're getting a guaranteed 4.5 cents per month per share. But that's the preferred one. But I chose the Class A shares because the dividend is way higher, 24% yield per year. So if we look at df.to, which is the one that's trading at $3, which is paying a 40% dividend yield, but doesn't always pay the dividend because net asset value right now is below 15. It also has a 30% margin requirement according to Questrade. So it is actually considered safer than ftn.to. Yet FTN has paid dividends more often than df.to. So check out their website, check out their products, but definitely their safest product is Dividend 15 Split Corp, dfn.to. But it doesn't mean that their other products are bad or that their other products won't be paying a dividend. But I've realized with this market crash that I can't handle stress. It's not good for me. So from now on, I want to keep things simple and safe. So for me, I went with this one here, Dividend 15 Split Corp, because it's the most consistent. And if you want to go even safer, you can buy the preferred shareholders, but you're getting a much smaller yield, 5% compared to 24%. But at least you have no risk of losing your capital. Because worst case scenario, you'll get $10. I might buy some more dfn.to, but only if it drops maybe below $4. So the next target for me would be below $4, and that's if I have capital. Right now I don't have capital, but I'm gonna have to figure something out because definitely everything's on sale right now. So many opportunities to buy stuff. All right, so let me know what you think about these mutual funds. If you've bought some and at what price, leave them in the comment section below. If you have any questions as well, leave them in the comment section below. And like always, if you're gonna open an account with Questrade to trade on the stock market, use my referral code in the description below the video to get up to $250 back. Thanks for watching.